Good morning, traders. Are you guys ready for pre-market prep? We got another action-packed show for you guys. Of course, there might be a little bit of a rant out there. We'll talk about, was this a bottoming action? Elon putting it on pending? Do you guys see any spam bots out there? Guys, report these out there. We'll see what happens. Today, we'll talk a little bit about Affirm earnings. We'll get into Hood. And we got CC Lagator, CEO, co-founder of Options AI. We're going to be getting into, of course, some options actions. Stay tuned, guys. We got a great show for you. And hit the like, of course. We need a record likes. Let's go.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's go ahead. Let's bring in the one, the only Joel Elconin. What's going on? And of course, my man, Dennis Dick.
Triple D.
What's up?
What's going on?
All right,
guys?
let's run down the futures. We're
What's
on
up?
56 and a half handles at 39.83 and a half. Everyone listened to the At the Close show yesterday and bought the market, and they read Dennis's tweet earlier in the day. I got to give him credit where credit's due. Man, there's no resistance up here, folks. I'd be lying to you if I gave you a daily high before 40.50, but I don't think we're going to rally another 70 handles, at least not in this environment. But crude's up $1.72 at 107.86. Gold, who needs gold? Down 12.30, 18.12.40. Silver muddling in a 20 handle, down 7 cents at 20.70. Bitcoin risk on up 19.50 at 30,535, and Ethereum futures they're up $161 at 21.0850. Let's make it Triple D. Triple D, I have a question for you.
Yes.
Should I take my victory lap now, or should I take it later?
What's your victory lap for?
I mean, who was all over the Elon Musk Twitter deal from the exact day that the deal was done?
You sold it. You sold up there. Genius sale. Genius.
That was the easiest investment decision of my entire life.
Yes.
I sold half of my stake at 55. I said, oh, you got to keep it, right? Wrote it down to 35. You get a gift like that. Boom. I think I got 51 and a half. And so my question is, do I take my victory lap now or should I take it later? Not only did I say that, but I said Musk, his stock was at $1,000. Now it's at $750. You think it's
you called all that for sure.
Yeah. Do you think
and
it's
we called on this show together.
bots?
We called on this show together that the risk reward at 50-51 was definitely not there to be long because we knew Musk is a loose cannon, and you know what? He could just do something like this. I mean, this is unprecedented for coming to negotiate a deal and then just publicly tweet out, I don't like these things. I don't know about this. I mean, I don't like these fake accounts. I mean, this is a ridiculous excuse to try to back off a little bit on this deal here. And he's backing off a little bit. He might back off the whole thing. So I have said before, obviously there's still risk arbs that are going to be giving it, the potential this deal could get done at 54.20. Risk reward is starting to set up more even now. At 50 the other day is just dumb. Like if you're buying it up 50, trying to get the last $4 with Musk as your buyer, I think that's the dumb money. That has been proven correct. It is off the lows here, though. As soon as the bots see anything, show the chart, Twitter. As soon as the bots see something like that, they hit first, ask questions later. They hit it really low because the deal is not off the table. It's just got potential some hiccups here, and it might be off the table. So you got to reevaluate. 54.20 is your upside. It's $40. Your downside, I've said it's going under $30 if he pulls the deal entirely, and I still believe that because the market is in a different place than it was when this deal was announced. So that's why, it's back to where right now, $40, where it was pre-deal. But all these stocks have really been beat up. So I think if they pull the deal, Twitter's under 30. So you get $10 downside probably now, but $14 upside. So it's probably priced where it should be. I think
what about the bots? I mean, have I been like all those people that get under your skin, Dennis? Those are bots. Those are bots.
People are
Just
making fun of
trying
my
to.
hair
I
today,
mean,
too.
now
The
he's
bots
talking
are
about
making
it.
fun of my hair too.
That's the
today.
hair indicator, man.
So
That's this
listen, you know
market.
what?
These bots.
We're gonna take a
I got my
break.
playoff beard going too. Oilers, baby.
We're gonna take a break. Everyone's gonna read my article. Okay. And then everyone, 1,000 people here are gonna put in the chat, great call, Joel. And then we're going to continue with the show. So I'm going to go on mute here for a minute, and I'm going to take
What
my
about
break.
me?
I
I
mean,
gave the
no,
I
Dennis,
had a pretty dang good call on that too.
You did right.
I don't
You
think-
just talked about risk reward. I'm not
I
letting you
made-
take credit for this one.
I made
And
money
Mitch
on
bought
this.
it. Mitch
I made
bought
money
it
on
on
this,
technicals.
guys.
Mitch bought it on technicals, and Spencer. Oh my gosh, Spencer!
I made
bought it.
money on this.
I'm going to do my victory
You were long
lap.
this and
I'll
made
right
money?
back. I'm
Hell
gonna
yeah,
warm up my
Dennis.
coffee.
Holy,
So here we go.
Mitch,
I want
you're
to see
genius.
1,000
I
great
don't know how
calls.
you made money on the long side of this thing.
You
But...
buy it at 46 and you sell it at 49.
and you get out before the Musk tweet.
And you get out before the Musk tweet.
Joel's left. He's gone.
He's gone. Joel's
He's upset.
Look at that, guys. Look what we did.
He's just gone.
Empty chair Joel now.
Empty chair Joel. Well, anyways, good call, Joel. We'll give you that.
Well, everybody, let's bow down to Joel. Let's bow down.
I'm not getting a lot of credit. I think I did call the same thing too, but I'm going to take.
Look at the love. Look at the
I'll
love.
take a little
Joel.
victory lap on this one, but it's still unknown. I'm just setting up. I've done risk arbitrage for 20 years, so I'm just setting up what my thought process is as a risk
Joel
arbitrager.
just retired, says Miss Whitehorse.
He's gone. He's gone.
Gone.
He'll
He's
be back.
gone from us, man. Look at that. Look. Empty chair, man.
Empty
Empty
chair,
chair,
Joel.
Joel.
Okay, let's cheer him back on. Maybe he'll come on for the grand finale. Don't you start cheering
Let's
when
go,
you cheer.
Joel.
They come out for the
Let's
encore.
go, Joel.
Encore for another Twitter
Joel.
call.
Let's go,
Encore.
Joel.
Joel. What's he got?
Joel.
What's
What
he
you got
holding
there? What you got
You're
there?
blurry now. What
Yeah,
happened?
what you
He
got
came
there,
back
man?
Blurry.
Man,
I just did my
Twitter's trying to
victory
shut you
lap.
down.
And
They're
I
shutting
just
you
did my
down.
victory
Twitter's
lap.
shutting you down, man, for everything you just said bad about them.
Hold on, Joel. We need your camera to catch up with you.
Yeah, what's
camera's-
going on with that? That's kind of funky there.
Twitter's
isn't
trying
it?
to shut you down, man. They're
It's
trying to
starting
rug
to
pull
catch
you.
up. He's starting to look normal again.
There you go. What was that cup? We need to see that cup again because we couldn't see it before.
We still can't really. It's blurry.
Oh, there you go, Michigan.
Oh, Michigan. Go
Yeah.
blue.
Elon didn't go to
Blue.
Michigan, did he?
No, he couldn't get in.
He got denied.
Yeah,
that's
the
not- that's
Costco
okay.
coffee, it's great. But anyways, let's talk about how smart Dennis is.
Yeah, let's go to it. My man taking a shot yesterday morning, and I'll ask the question: did we get a technical bounce, or was that the bottom?
I don't know. It's to be determined, but we were due. We kept saying for a couple days that eventually we're going to bounce here, but you kind of felt it. I mean, you've got these talking heads on CNBC, like literally yesterday afternoon, talking about, well, we haven't seen the VIX spike yet, so I haven't seen, any type of capitulation. I'm like, this guy's an idiot. I'm like, let's look yesterday morning. Maybe you haven't seen in SPY, but you sure as hell have seen capitulatory selling in all of those ARC names, which we said yesterday morning on the show, which we, talked about and which I tweeted out at 9:45 yesterday morning. Follow me on Twitter if you want more updates at Triple D Trader. But when you get stocks that are just going down relentlessly, like I used Square as an example on the show yesterday, and it goes from $100 to $68 in a week. When you see Coinbase fall from $150 to $40 in a week, there's capitulatory selling going on in some stuff. Don't kid yourself. There was some washouts happening yesterday morning and even the day before. It's maybe not all in one whoosh, but yesterday really felt like, okay, they're just completely done with this. It's been too easy for the shorts. So was that the bottom? Nobody knows the answer to that question. Was that a bottom in the ARC names? Apparently so. I mean, you've got stocks that are up 30, 40, 50% from the lows they had yesterday morning. So, I mean, there was an opportunity. I did put some of my cash to work. I bought my long-term portfolio from 52% cash to 42% cash. I bought, I think, 5 or 6 stocks yesterday. Some growthy names, but more, I'm still at a reasonable price. You know me. I'm not jumping in ARKK long-term because I just don't, go with that trading strategy. Would I put it on for a trade long? On pullbacks right now. But I mean, this is the market that we're in. It was massively oversold, some of these names. Now, does that mean S&Ps have to follow suit? They are so far, but I don't know if that was the bottom, but there was a lot of pessimism. And I think you could have, I think you could have a little rally here for the next week or two.
Yes.
A couple things here. First of all, both Dan Ives and Gene Munster were wrong on the Twitter deal. And I really love and respect Gene. Okay. So I'm going to be a
Long on
Wall
the Twitter
Street
deal?
analyst.
He's
They
Joel,
thought
doing
the
can you
deal
fine.
shut
is
your camera back? Whatever you did when you left and came back is like now
really
yeah, your audio is
what I
choppy,
do.
your
It's
camera's
it's
choppy.
just
Maybe
the
unplug your
internet.
camera and plug it back in or something. Let's
Uh,
try. Let's try
you know
to.
what? Should I?
If you need
Let
to,
me.
close the window and then just reopen up.
Yeah,
Come back in
Okay.
here.
yeah. Come back in.
I'll
Leave
get you
us and
back
come
in, Joel.
back to us because they didn't like your bragging. So we got to
So,
get them
well,
back.
I'll at least give a comment so you can kind of add to what you just talked about, Dennis. So,
Yeah.
was this more a dash for trash,
Oh, yeah.
or did we see some actual like higher quality names also get that rally too?
You're seeing the higher quality names play catch up today. Yesterday, you didn't see that. You saw the dash for trash, the short covering, and to this point is you made a good point in saying, "Well, I was just short covering yesterday." But I will tell you, and I've been trading for 22 years. I will tell you that every single time you have capitulation, the first buyers are the shorts. Do you want to know why? Because when you have capitulatory selling and nobody in the whole world is willing to bid for the stock, the short person
They
is
will.
because
They want
they're
to lock in
bringing it in.
profits.
They're profiting. They're exiting their trade. It is always your short squeeze that brings, that starts a capitulatory bottom. We saw a short squeeze absolutely yesterday morning. We've seen this before, though, in the ARC names, but it was absolutely vicious. It was more vicious than any of these other days. I mean, just to go into Coinbase, which everybody had to throw out, they couldn't stop selling like, get me out, this thing's a zero. And yesterday morning, after already having the bad news, it goes down another like 25%, all the way down, kissing almost $40. Then what happens around 9:45? Buyers, the shorts are like, okay, let's bring it in. And then it starts going. They're like, oh, now we're rallying. The shorts start squeezing a bit. We went from $40.83 to $60 in about an hour on coin. That's almost a 50%
Yeah.
rally from the lows intraday on no news, just the bounce, the squeeze, and the bounce. And then there was a plethora of other Kathy names that did the same thing. I mean, Square, 65 to 75 in about an hour. GME was going up so much that it halted 3 times. It goes from $78 to $108 in a matter of 20 minutes. I mean,
Speaking
they
of
started
that 90s.
So if you don't think it was a short squeeze, that's a short squeeze there, man. On GME, there's still some people who are shorting that thing, thinking it's going back down, and they were squeezing the daylights out of them yesterday after 9:45. So I tweeted it out. You can go back and look at my tweet. I think on some of these names we've seen a short-term bottom. I don't know on the overall market, because one thing to consider too is this all started with growth a year and a half ago, back in February. The big guns didn't really start selling off till significantly after that. So you could have a bottom in growth, and you could still see S&P start leaking because the S&P hasn't had the problems that the rest of the market has. I mean, the S&P is down, 17 or 18% from the highs. Not nearly, like some of these, like Kathy names, are down 70, 80, 90%. So they're all oversold. Does that mean I'm investing in them and putting them in a long-term portfolio? No. But I think if you've been sitting on 100% cash, I think it's time on pullbacks, not on rips today, on pullbacks, which yesterday you had the nice pullback
Big
after
pullback,
9:45. I even tweeted out, I was like trying to just basically, I'm trying to feed you guys here. I'm like, okay, now we just had a 20 handle pullback here. I'm nibbling into some stocks. So I can give you the list if you want to know what I bought.
Before you do that, we also
Good.
had some capitulation. Capitulations just when people just give up. And
they did on those names.
Well, not only those, I mean, look what they did to Apple, Dennis. I mean, have you ever seen 3 days, 15 points like Apple? Microsoft, I mean, this thing took out 270. I thought it was going to 250. I didn't think it would do it in 3 days. Google's been washing out. That's kind of been a slow leak. Amazon got really close. I looked at Amazon, and you have an opportunity. You're getting a whole reset on Amazon here, right? The April low of COVID, was right here. So, we complained, and when the market was going up, that it was just these individual stocks, and they were holding the market up. And then they flushed them down the toilet. And that's the capitulation, is just when everyone just says, I can't take the pain anymore. Sell it down to 140 and sell, Microsoft down to 250. And that's what you saw. So now if these things are getting a bounce, and I'm not looking for these stocks just to blast up. What I'd like to see is them just stabilize and just kind of hang in there.
Stop going down for a bit.
Stop going down.
Get people
Okay.
thinking. Get
Yep.
people a little more FOMO in there. There's been no FOMO for the last couple of days. Joel,
I
to
agree.
your point on Apple, it's a fantastic example. Apple lost 10% in 2 days on no news. When the hell has Apple lost 10% on 2 days and no news? So if you're looking, and this is a lesson, we're going to do a lot of teaching here today, but if you're if you're looking for capitulation in the VIX, if you're looking for capitulation in these other signals, you're looking in the wrong place. You find capitulation. Mr. Talking Head on CNBC yesterday afternoon, who said, we haven't seen anything close to capitulation, is looking in the wrong place. He cites the VIX. Well, the VIX has already been elevated. The VIX is a little bit of a lagging indicator, to be honest with you. You got to look at price. You look at price action. You read the tape. I've made my living for 22 years reading the tape. It felt capitulatory yesterday morning. Could I be wrong? Absolutely could be wrong. Maybe I'm reading it wrong. But I have 22 years of experience. I might be reading it right too. It felt capitulatory, the selling yesterday morning at 9:45. I'd opened the stocks. They puked them for 15 minutes. And then it was seller exhaustion. They were done selling. And then they had the wicked rally. And then what happens? Okay, you get the rally, but people start selling again because they haven't, seen, they've been rewarded so many times for just selling every rep. So we started to leak. But now they come in today and they're like, oh, crap. Where'd this come from? Rating was on the wall, though. Rating was on the wall when all those Kathy names were holding up yesterday afternoon. So despite the S&Ps actually going down and making a new low on the move after 9:45, ARKK didn't even come close. Bring up ARKK because it's been the one that's been killed the most. So it's going to be the one that's going to give you your signal first. 35.61 up to $40. Then it could not get down. It couldn't even come close to that opening low, Joel, despite the SPY making new lows. And then it starts to go up at the end of the day again. You could see the names starting to want to come in to the higher risk names. The money was starting to come into the higher risk names in the afternoon. These stocks were holding up. And there's so many examples. I mean, Carvana, CVNA, it goes from 28 to 45 in that first 15 minutes, and then or in 20 minutes, and then it pulls back, but it wasn't even close to getting back down to where it was. Beyond Meat, they all threw it out there with the bad earnings report, which was deserved. Should Beyond Meat be, is it a zero? It might be. It's not one that I'm going to put in my long-term portfolio, but definitely had a bounce. I mean, definitely had capitulatory selling to everybody's definition. Volume spike, washing out after, trending down, and then the boom. And then the bounce, that looks like capitulation to me.
I just want to illustrate, Dennis, for you. Sometimes we have new people to the show, and what I'm showing here is this is a 60-minute chart, and I encourage all of you just. I know you like some tick charts and minute charts and 5-minute charts. If you're good at those things, that's fine. Stick with them. Looking at the hourly, I think can at least glance at the hourly. This is the washout. Well, first of all, the different colors here. You see the purple and cyan or whatever. That's the after hours in the pre-market trading. All right. So when it goes to green and red, that's when you start the regular session. And this is what Dennis is talking about. This is the first hour of the market where you had the washout, and probably if I go down to 15 minutes, it's even probably closer. So this is what it did. The market came down and made a new low, but this didn't even made a higher low here. It came down a little bit, and then this is how you finish the session. And then once again, right here, when it goes back to the cyan, that starts the after hours of 4 o'clock. So for you new people out there, I just wanted to know what you were looking at. Mitch, what did we talk about? 40 yesterday? Because there was a couple tops at 40, and I said, you know what, it's going to come in above that, and then do you put your bid at 40 and wait for the pullback? So that's what I'd look for. No double top. If it gets a pullback to 40 today, I'd love to see it and maybe risk down to the closing price.
Yeah, I
Now,
would be a buyer of pullbacks on these names now,
Mhm.
not coming in and chasing something up 100 handles. We just rallied 100 points basically since 3 o'clock yesterday. So you
I
got to
know.
watch. There'll be
Yeah.
more people that will be disbelievers here, and they may be right. But now what you have is a
I'm one of
tradable
those.
bottom, though, and
I'm one
that's
of
For
those.
sure.
And so Mitch on the other side, and that's fine. We'll just talk in a second and give you a
Yeah.
case. But I just want to say you have a tradable bottom. If for whatever reason we're wrong, we'll know we're wrong. How are we going to know we're wrong? Those lows will get taken out.
Perfect.
So those
That's
lows get
the
taken out.
question that
You
I
got
was
to
gonna
dump
give.
all that stuff. So if you
Yeah.
want to chase, you now know where your out is. And Unity Software, which I actually would be a buyer on a pullback, 29.09. Now it's 37. So that's an 8-point. That's a lot of heat you got to take. But if you come in here, maybe get some disbelievers, bring it in a little bit, maybe get a 33. Okay, I can stomach a 10% loss in that thing. So look at where the low is. That's going to be your out on all of these trades. And that's for Apple. That's for all of them. If we're putting out the theory, and all trading is theorizing. Nobody knows anything. We're just putting out a theory that we may have potentially seen a short-term bottom yesterday morning at 9:45. That's the theory. How you play it is you're buying pullbacks, and then you're getting out if those stocks make new lows. That is your contingency plan. If they don't make new lows, good times for all. So, Mitch, give me
Back
your
and
reason
fill.
why you don't think this is the bottom
Holy
or a
moly.
bottom.
They're telling me to let you speak. I haven't even spoken yet.
Gotcha.
So my biggest thing is just asking, what do we need to see today to give us confidence that yes, this is the bottom?
You've got to see buyers actually coming in. And, you are seeing it already. So far, so good. But you got to see the rallies hold. You can't see like all of a sudden, Fed speak. And this is another good point, too, is some bad things were said by Jerome Powell last night after hours, which
I
we
know.
didn't even
He
comment
did.
on.
Yep.
And it knocked the S&P down 20 handles. I was buying that dip because I already have the theory that I think the low is in and being rewarded handsomely for it here this morning. But you look at Jerome Powell's comments from last night, and do you have them, Mitch?
Yeah,
we
we can talk about that. The no soft landing.
Yeah.
We could definitely talk a little bit about what happened with Powell, and he pretty much just kind of gave both sides of the coin, right? I mean, this happens often. He said that there's no sure thing that inflation is going to be coming down here, and then he also stated how, of course, that there's a path to getting it down from here. So I think there is no exact answer, but what I think everyone's holding on to is everyone was talking about this soft landing, right?
Yeah.
And he specifically said no soft landing.
Yeah. He said that it's going to be difficult for them to have a soft landing, and the market got hammered.
There's no guarantee. There's no guarantee that he can give a soft landing.
I don't think he can. I still think we're going to recession. I'm not taking recession off the table. I'm just saying on some of these growthy names, I think I have a tradable bottom. I don't think recession is coming tomorrow. I don't think it's coming next week. I think later this year it's going to get ugly again. I do think we can maybe take out those lows. I'm not saying we have the bottom. I'm saying I have a tradable bottom here now, though. So where maybe we get a few weeks of reprieve. Maybe we get one of these little quiet little 30% rallies on some of these. We have had it on the ARC names in one day, but you get a pullback here. I mean, and maybe the Qs, maybe Apple can get back up to the 155. Maybe there's some money here. And Apple's not one I would pick on because it hasn't been hit hard enough. It really wasn't one of these, growthy names. I'd pick more on some of these really beaten down names that are simply way oversold. The shorts have maybe overstayed their welcome, and I think there could be a little rude awakening there. Upstart, $25 to $35 in 2 days here now. Again, hard to chase it because I don't want to take it all the way down to 25. But, if you do get a pullback in the next day or two, have your shopping list. You'll get more pullbacks. I'm not chasing. I'm still not chasing.
I mean, it may be today's, not the day. I mean, like Mitch, you said, is there, something today, right? For me, like, there's nothing like today. In the S&P that will give me confirmation. I would much rather see us fade a little bit, and back and fill, and maybe give back some of these gains.
We can't
today.
make new lows though now.
But that's 100. Wow,
and that would be a big hole in the theory.
Okay,
we don't want new lows.
Yeah, definitely don't want new lows. I
Don't
mean,
want
Yeah,
new
if we
lows.
had
That
new
puts a big
lows,
hole in
then
the
we
theory that we made a low.
is
yeah,
when you make
leadership
new
that would
lows.
be
is leadership what we're looking for? Because I even saw like Apple, it didn't really close. I mean, it wasn't looking the strongest, and neither was Microsoft at the close. Now they're looking a little bit better, but do we need the leadership to come back?
You
we
need that
needed
to
to
hold up, but you don't need
stop
this.
going down or just be flat. I wouldn't be looking at these stocks either because I think you got a lot of people stuck on them. But so if they just stop going down, I think that's good. Or it's stabilized. I think they'll grind. I think
There's going
these
to be a
stocks will
grind here.
grind and go
I don't
back.
think there's a reason to chase. I'm not saying come and buy Upstart at 35 when it's 25
Mhm.
2 days ago. I'm saying on dips now, I think those lows might hold. I think the ARKK low could hold for a bit. I mean, it's ridiculous when you think $70 a month ago, it got cut in half in a month. I mean, what do you want, capitulatory sellers? 70 to 35. It's been beat up a lot. Can it go to lower? I've said I thought, it could go to as low as $10 long term. So I'm definitely not investing in ARKK. I said this one was 100, by the way, as well. But is it oversold? Absolutely. Was there a technical bounce yesterday? Absolutely. Did we squeeze a few shorts? Do we look like we had some capitulatory selling? I think so. So that's why on a pullback here, I'd buy some of the ARK names for trades, leaning on those lows.
Okay. If you're feeling like this is the bottom, I wonder how you feel about a growth name like Affirm. We got the earnings, guys. Affirm holding here Q3 EPS at 19-cent loss, beat the 54-cent loss estimate. Sales were at 354.76 million, beating the 344.03 million estimate there. How are you feeling about Affirm today then?
I will say if Affirm reported these results last week, it would not be up 38% on these numbers. But you squeezed the shorts already on Affirm into the report. It had the rally ahead of it, and now you're going to squeeze them even more. And unbelievably, this stock has almost doubled since this time yesterday morning. That's unbelievable. From $13 to 25.
Wow.
So am I buying it at 25? Heck no. Heck no. It just doubled in 24 hours. Yeah, so you can say, oh, it was 40 or 50 or 60, but stop thinking about where stocks were and start thinking about where they just came from. The stock just doubled. So I'd ring the register on that. I mean, it's up 100%. If you were lucky enough to buy this at 14, it's 24 a day later. You to Joel's saying, don't look that gift horse in the mouth. You shove that thing down the horse's throat. But there's other stocks that, this is giving me confirmation a little bit more that my theory that we bought them yesterday at 9:45 might be true.
What you want to see, I mean, it's with something like Affirm here, you rally up more a couple days, the enthusiasm, maybe you make a high. I'm just going theoretical here. Maybe you go to 30. I don't know. I'm just using this as a
Sure.
as a learning lesson. Okay, so you went from what 14 to 30. 16-point move, 8. Maybe, that, things calm down. Maybe we have a bad number, a bad day in the market, and the thing gives you a pullback, right? And then maybe 50% or 382
There
if
you
you
go.
want to get into the
There
other
you go.
fib numbers. And then you hold that for like a day or two. Because what's going to happen now is the big money is like, it was free. It was so easy yesterday. They wanted to buy 7 million under 15, right? Oh, it was easy, man. This is traded 1364. I'm going to bring this in at 13 and 12 and 12 and a half, 10 maybe. But then it flips. So now they readjust. Now they're not going to be able to get their 7 million shares at 15. Where do I step up? I don't want to step up on the open and buy it up, $8, $6, $7. So there's a lot of different things, but hopefully you get a little bit of a rally, a little topping period, and then a little bit of a pullback. So that's what I'd be
I
looking
think
at.
you think
in
about the
Affirm.
50%. I think that's a good call. Like some of these moves, think about the 50% retracement from the low of yesterday, pulling back in. That's an opportunity to strike. We love our fibs, support, resistance, trends, and 50% retracements. That's what we're into on this show.
No golden 61.8?
Yeah, no, thank you. But the 50% for sure. So, I mean, I think you think about that on some of these names, and and a lot of these names, we can just fly through some of them, like Carvana, ridiculous rally, crazy rally. Coinbase, Unity, Roblox, Square, Bros came back, buddy. Bros bounced off that low nicely. The Bros,
man.
the Bros.
That's horrible earnings. It's up.
The Bros was trying. It was on up, but it was trying. Roku, what a rally in Roku. Look at that
Yeah.
reversal yesterday.
Hey.
75 to 90. 24
Yeah.
hours later. That's a sign. It got a few short square. There'd be a few people. If they were short that stock, I'd be a little nervous.
Now, if let's say for some reason we get a little bit of mixed signals out here, like maybe some dash for trash coming on down here, but some leadership rallying on up, let's say Apple up 5% or something like that, would you still be feeling as confident for a kind of a bottoming action?
Well, yeah, that would make me more confident. I don't even know
Okay.
if you need
It's good.
that on these names. So I want to be clear. I wasn't calling an overall bottom on SPY either. I was calling it on the growthy tech names. So again, because this all started with growth, it's going to end with growth. Like that is the one thing. But that it didn't start with, Apple made new highs in November, well after the February topping and growth. So I think the growth names are just massively oversold. And I think they were due for a bounce. I think you got that technical bounce, and I think you have some of these lows that potentially might be in. But
So let's look under the hood and check out Hood here. Hood,
there is another
Robinhood.
one.
Let's go. Let's check this one on out. Robinhood Markets are trading. The shares are trading higher after 13D filings showed Samuel Bankman, founder and CEO of FTX crypto exchange, disclosed a 7.6% stake in the company here. And Hood getting a little bit of a lift today.
Wow. So up 23%. You get the perfect timing for this filing to drop because you had, obviously
Absolutely.
a name that's been beaten right up, fits right into the whole Kathy theme. I think it's a Kathy name even. Bounced off the lows significantly, and then you get a positive headline, which will really squeeze the shorts. And they got this. If this headline came out a week ago, it would not be up 23%. But because we've just been squeezing yesterday, now you're really squeezing them here today. So 23%, $10.53, up significantly here. It's a nice pop. Again, now it's hard to chase though, man. I mean, this stock, put it in perspective, was $7.71 yesterday morning. So you're talking about a stock that's up 50% basically, or 45%. My math, right around there, 45, 50% in a matter of one day. So this is almost a ring the register if you bought it yesterday, if you got lucky enough to time those. But would I buy pullbacks on Robinhood now? Yeah, maybe I'd be interested in the 50%. Maybe it gets forgotten. Maybe it pulls back to that 950 area. Maybe then you strike and you lean on those lows.
We'll definitely keep on
for
watching
this
here.
one. I'll just go technical a little bit on it. They got really excited here in the after hours trading. They took it up to 1170. But I'll just, if you're looking for a target today, it could very well go back to 1170. I'm not going to say it's impossible, but I'm just looking at this like $11 area here, and there's like 3 highs there. So the fact that you've backed off from the pre-market high, you're getting a reset here at 1054. You don't know what kind of optionality is gonna play in this today too. So if it doesn't get back up to 11 and take out 11, make a challenge for that pre-market high, I'd be worried about it. More of a chance rolling over and coming back down. Are we going to fill the gap at the top of yesterday's range at 883? Well, not unless the S&P is going to take out yesterday's low. So that's the way I'd be approaching the hood. We were talking about someone buying it, but or taking a stake. I mean, good move. I mean,
I think that could happen. I just don't know. Like I was saying before, I could go down to 5 and get bought out at 8, and you'll be like, well, that sucks. I do think at a certain price, Robinhood could get bought. But again, they're going to struggle here. You are in a retail environment. The retail traders have been rocked because they're in a lot of similar names. Probably some, you could see the accounts just like Coinbase. You could see some of these accounts actually, growth slowing or even potentially accounts closing, which is a scary thought. But I mean, we've punished a lot of new traders, that were just buying every dip and being rewarded for it. And those, it's going to hit Robinhood in the bottom line. And that's a scary thought.
It's definitely something we can talk about. I know it's Friday, and I know a lot of people are going to be watching some option action out there. Let's go ahead. Let's bring on our guest here, CC Lagator. Let's go ahead. Let's bring him on here. You guys might know him. Co-founder at Options AI, joins us all the time, and excited to go ahead and see what you're seeing out there in the option game right now.
How's it going? Good to see you guys.
Good to see you, CC. The first question I have for you is, we were talking earlier in the show about like capitulation, and you can see it in stocks, and you follow the options order flow, much more than I do. Is it, is there something can you see that in the options markets? You see huge spikes in volume, or is that something more that you just, that is easier to spot by the eye in stocks?
Yeah, it's funny because you hear whenever you have markets like this, right? You hear a million people talking about the VIX all day long. And that it gets butchered a little bit, the way people talk about that. I think people are so used to those sort of like real quick sell-offs and reversals in the market where they see the VIX do like some crazy spike intraday and all. And you don't necessarily need to see that for a capitulation in a market like this. I mean, this market has been relentlessly selling off pretty much every day, right? And it's kind of a boring sell-off in some ways, right? I mean, within individual names, it's been exciting. There's been some huge, pukes on earnings and things the last couple of weeks. But the market itself, it's like, oh, it's down another 5% this week. It was down, 3% today. Those are the types of moves we're seeing. And in that case, it's like options pricing in the VIX kind of has it right now, right? So I think in some of these big moves down lower, where you'll see like the NASDAQ down 5% intraday, you'll see the VIX up near 36 or something. And then the market sort of, finds some buyers yesterday, midday or in the morning, and, you see the VIX 30, it's kind of pricing right. And so you could see a capitulation for this type of market without a VIX spike to 50, right? Now that could happen, but it would be, that sort of classic thing everybody's waiting for. Like I've never seen so many people like all on the same page bearishness than like 2 days ago, right?
Yeah.
So everybody was like, oh, this is going to keep going down and it's got farther to go. And then we're going to see some big, panic sell, and then that's going to be the bottom, and that's when you buy it. And it's like if everybody's on the same page, it tends to not work out that way, right?
And if you look, I mean, there's been panic. It's just been organized panic every single day. I mean, when you look at the carnage, and sometimes you just got to look at carnage, like a Coinbase is the best example.
Oh yeah.
I mean, this was a $150 stock 2 weeks ago. Yeah. It went to 40. I mean, that sounds a little bit like capitulatory selling when a stock falls 70% in 2 weeks.
Well, and that's a great point because I think you all said it earlier in the show, these stocks have been selling off for like 6-9 months, some of these stocks. Right? Yeah. And so that was, if you're looking for a capitulation low in Coinbase, it was like selling off for 6 months and then it did that, right? So you are seeing those sort of classic examples. And then, you all were mentioning like the big cap growth names, I guess like Amazon and all like that. Everybody's staring at Amazon in like 2000, right? And I think it got down yesterday, maybe like 2050, right? Now you have to remember like Amazon and Google are about to do a 20-for-1 split, right? So if that's that's $100 Amazon print almost yesterday.
Wow, that's a great point.
Yeah. And so, I mean, you tell me, like, you would want to, if you had a shot at Amazon at, at its basically its pre-pandemic levels. Yeah, and Amazon's a fascinating one to me because it got hit so hard after their last earnings. And it's like, all right, well, the slowdown post-pandemic, but you're going to give up the entire pandemic, like gains of Amazon. You're telling me that Amazon didn't like, it didn't build a bigger moat during the pandemic that's permanent. So that kind of stuff is like, I mean, I'm sort of with you guys. Like, I don't know how far this goes. If there's a recession, there might be much lower lows. Like we have no idea. Right.
Right.
But just looking from, as a trader, like a shorter term view and all, you don't necessarily need to see those classic signs. There's signs, like if you look a little deeper, there's signs there. Right. Now we could all be, crazy and the next week the market's down another 10%. I mean, you have no clue, but those that sort of classic, oh, the VIX has to be 60, that kind of happens on those. It's a different type of sell-off sometimes where you just get this like headline, the market's puke. you get that capitulation and then they go. But this is like everybody waiting on a recession type sell-off, right? It's very different. It's very orderly.
And there's some of this recession. You know, we've had some significant damage. NASDAQ down 30%, S&P kissing down 20%. I mean, I don't know if we've priced in a full recession, but we priced in some problems.
Oh, yeah. And then also think about what else is in the S&P, right? So you've got energy names and you've got, right? And so one of the things for the markets to turn around and people to have more confidence, obviously you have interest rates and then, or inflation, I'm sorry. And then you have, like oil prices, oil and gas prices, right? And so that's all in the market, right? Those stocks are doing quite well. And, so you're going to see it might get muddled, right? Like, because you might see energy come down and growth go up. And, it's not like, this is a very different type of sell-off where it's been quite orderly. And it's almost like options have a slightly more difficult time pricing those kinds of moves, just like options. If you have a slow and steady march higher in the market, options options market makers like throw in the towel because the market's moving enough that the options are properly priced, but you're just getting crushed on decay, right? And so the same thing can happen to some extent on the way down. Whereas if the market's going down, right now options are pricing about, let's say, a 3.5% move every week in the Qs, let's say. Today I looked, I think, what are the Qs up pre-market? Like 2 something?
Up 2% right on.
2%. I think options were pricing more than that just for today, right?
Yeah,
like
crazy when
over 2%
that.
moves.
Yeah.
So options are already pricing these kinds of moves. And on that slow, steady, march down, it's like like market makers are not going to get caught holding the bag with a 50 VIX when the market reverses and they get like pummeled with options sold to them, because then they're screwed, right? So it's sort of like, I don't see, we could still see that, but I don't necessarily think you need to see those classic signs that everybody's talking about.
I think we got a question here. I think it kind of fits in well with what you're talking about. In that the options, a lot of them have fell outside market priced in ranges for this week. He's looking for general comments that, will we go back into those ranges? Is that kind of the way that the options are priced? Does it take a little bit more time? Because there was a huge reset. So could you talk about that moving forward?
Yeah, I assume what he's talking about is like out of the money calls or something.
Mm-hmm.
So you can look at, you can look at the options prices, and we've talked about this before, like, using expected move. And I think that should be the center of most options traders universe, because it's essentially translating all of those Greeks and vol and, all of that into something like an actual trader can use. And if you look at those expected move levels, my guess is if you go through a bunch of charts, you're talking about some of those like fib, levels and stuff that you're talking about, right? So where you would want to catch one that has made a so first of all, use the expected move as a gut check, right? So if you own a bunch of out of the money calls that have some value and now they're like really far out of the money and they still have some value left in them, use the expected move as a gut check and be like, does the options market even think that these have a possibility? Because if the options market is way under those levels, then you should, maybe think about adjusting that position, right? Because I really doubt we're just going to rip straight higher, right? Like nobody thinks that.
No.
So that's one way to do it. And then from a new trade perspective, that's also a great, look for an opportunity where maybe the options have underpriced the potential for this to fill in 50% of its, gap down lower from the last couple of weeks. And if options are underpricing that move, then that's a really interesting opportunity if you do think that, there's a potential for a bounce here the next couple of days or week,
When there's a lot of talk about, these big option trades and these whale trades, what are the whales doing? I mean, I've always, and I think Dennis kind of agrees with me on this, we kind of look like, well, what are they doing? If it's a big call buy, where they short the calls? Are they doing it with a hedge? It's something else. I mean, how do you view these older? I mean, you see it just constantly, a whale trade, option trader, spent this amount of money. How do
Right.
you interpret those trades?
With a massive grain of salt. And so you have no
Absolutely.
idea. Some are pretty obvious. You're like, you'll see a big headline about some option big trade like that, and you're like, that's clearly a hedge, or that's clearly against something. Sometimes, it's literally against, you can see some big position in another month. It's a roll. It's, like it's something that happening very normally at a hedge fund or a big institution. Other times it can just be straight up, like if there's like a biotech name about to report, like a trial or something, and you see some crazy print, that might be worth checking into. When I was a market maker, we literally, in certain names, particularly like, I don't think I ever made money making markets in like a biotech stock, right? They're impossible.
They're so bad, man.
Impossible to price, right? So how do you price something that does nothing? It's almost like those SPACs, like at $10 and then they go to 50. It's like, it's impossible to price as an options market maker because you don't know when that's going to happen. And so you basically have to price options in a way that you don't get sold premium and just choke on it for 6 months. But then you can't have it low enough that, like, if the stock goes $20, then, you've lost your house. So that's the same, thinking is like, if I see the type of name, like a biotech stock or something that could have massive news, and I see that kind of well print, that gets my antennae up. But if I see, somebody buys, you always see this, right? Like in the VIX options or like SPY, and they'll be like, oh, somebody bought 1 million, VIX 60 calls. They must know something. And it's like, no, they have a massive portfolio that if volatility did that, their hedge fund would go under.
There you go.
And so you have to be like, so massive grain of salt. I think it really depends on the name. If I see some, like for instance, like if you saw a huge Twitter trade at this point, like if Musk is tweeting this, imagine what he's talking about, like with his buddies and stuff, right?
Yeah, that's true too.
So like if you saw something like that, if you saw it in a biotech, if you saw something like that, but if I see something in SPY or VIX or even like, a big, FANG name or something, I'm like, I don't even pay attention.
All right. That's another question here coming from the chat. This is something we've talked about. Large open interest or large volume at a strike when it's 10 or 20% from its current price. Is that just more of a hedge? Is it? We kind of talk about those kind of acting as magnets. Any comments on that?
I think it also depends on the name. I think those things are very important. And you're seeing more retail traders start to pay attention to, open interest and where it's like all, within the stock. I think that everybody got introduced to short gamma during the, GameStop and all those furies. This is, I think, the next level of things that are pretty interesting within the market. And you see people in equities talk about the levels where all the volume happened, right? And you can sort of say, oh, a bunch of shares changed hands on this level. Options can do the same thing, and then they have the added benefit of being somewhat self-fulfilling at those levels, right? So in this particular question, if you see a huge amount of open interest, like pretty far out of the money, I mean, that could just be that the stock has moved, and that used to be a really sexy level for, options. But you'll see this in, we were talking about Amazon earlier. That 2000 level, like I don't have it up, but I guarantee you there's a ton of open interest on that 2000 level. And what that can mean is it's very similar to like if a bunch of, stock had changed hands at that 2000 level in the past, the options work the same way. The stock could get down there and it could see a massive amount of, there might be a ton of people that own puts down at 2000 and they become buyers of stock basically at 1999, right? Because all of those puts go into the money. So those are very interesting things to look at. Like if you see those big, and you can see it like even, just scanning a chain, you can see those big open interest levels. they tend to be, if it's in a heavily traded retail name, they tend to just be the sexy big number levels, right? So you'll see that in Tesla, like 1,000, or Tesla like 900 and 800 and 700. You see it on the big round numbers. And a lot of times they're people, if it's to the upside, a lot of times it's the people that own the stock selling calls against their stock. To the downside, a lot of times it's people own puts against stock. And then, those become levels that become self-fulfilling. Stocks tend to, huddle around there when they get close to it and pin in some cases. And I think we've talked about pinning, what that is. It's basically, picture that 2000 level on Amazon. If that stock got down near there, going into like an expiration Friday, like for this month, you would see every time it went down below 2000, you see a bunch of stock buyers. And every time it went back above 2000, you see a bunch of stock sellers. And it slowly like pins to that level, because you have buyers and sellers from all of the gamma changing into hard deltas that people will need to buy or sell. So those levels, I love looking at those. And, again, there's no certainty at what you're looking at. Right? Like you could see big open interest and it could just be some weird spread that you have yet to find the other side of. But I like looking at those. And I think that's sort of next level options trading, especially for equity traders. Like if they're looking into the options market to figure out some tricks on, what they're doing on the equity side, that's a good place to start.
I mean, I do that. I'm not an options trader, but if I've got, a smaller cap stock for whatever reason, I'll go look sometimes just at the open interest quickly just to see, hey, is there some level here where it's going to stall out? Because it's amazing. Like, you get this big, that's why a lot of times the 5, the 750, the 10, it's not coincidence that they stall out there. It's, that's where the options open interest is going to pull it to or potentially reject it.
Yeah. Yeah, it's basically the good way to think about, like, to translate what you just said is basically all of those options turn into stock at that level, essentially, like as a good, cheat code in your head. And it's like there's thin buying all the way down here, or there's thin selling all the way up here. And then it gets heavy at this level because there's a lot of people that suddenly entered the game at that strike,
All right, CC, before you get on out of here, quickly tell everybody, if they haven't heard about Options AI, what it is and how they can check it out.
Options AI is an online brokerage platform. Obviously, we specialize in options, but you can buy stock commission free. On the options side, it's $5 any trade, any size. So that means no per contract fees compared to the other places. And the center of the Options AI universe is we specialize in multi-leg options trades. And we do it in a visual manner. So you can, for equity traders looking to, get beyond just buying calls and buying puts, you can see it visually. You can see where it lines up on the charts. You can trade options technically. And, you can be doing multi-leg trades anywhere from like buying a call spread and not wasting money on a call with the VIX 30, or selling, credit put spreads, selling to the bears. And all the way to trading any market and being neutral, like selling iron condors, things like that. So, it's very visual and it's options focused, but, it's you can trade stocks too.
Yeah, I love the graphical approach. Definitely check it on out, guys. CC Lagator, the co-founder of Options AI. Thank you for joining us this morning.
Oh, yeah. Great to see you guys.
Great. Thanks, CC. Thanks for coming on. We got a question here about the levels, how to look up the options levels. It really depends on your platform.
Yeah,
it's really
that's
easy.
why I mentioned it. Go check out Options AI.
Yeah,
at the end of the day,
but he's talking about. I think what they were talking about was like the open option, like the open interest.
Yeah.
So it really, it really depends on the platform that you're on. Continuing to grind higher here, up 59 handles at 86.50. As I mentioned here, we're getting we're getting in the area of Monday's close. That's all I can really give you, folks. Up here is the closes. Monday's close was 39.8750, and then Tuesday's close was 39.9675. So we're just grinding our way back to from the closes for earlier in the week. No daily highs to book here, folks. Now I can't give you one. The only one I can give you is 40.50, and believe it or not, that was Wednesday's high.
They wanted to know what stocks that I bought yesterday for my long-term portfolio, and I can give you those if you want those quickly.
Why you give away all the good stuff, Triple D?
The gold.
Well, it's my long-term stuff. This isn't, trades. This is not, I have all kinds of trades on. This isn't stuff I'm intending to sell, so I
I
can
want
freely
the
talk
gold.
about this. This is stuck in my long-term portfolio here. So I brought my long-term cash component down from around 51 or around 50 down to about 42 yesterday. So I think I bought 6 stocks total. I added to a couple of the stocks. So a couple of these are the same names. I added to my Virtu, VIRT, Virtue Financial. I mean, it's been just murdered, along with Robinhood, probably, because as retail suffers, Virtue obviously benefits from payment for order flow relationships. That might mean less volume coming through Robinhood for them. So I think you're seeing some justification, but I just look at Virtue, great run company, obviously high frequency trading firm, good dividend. I've played the stock before. I started buying it after the earnings report around 29. I've added a couple of times. I added some more to that yesterday just because I feel like, and obviously catching the falling knife here, which isn't something you want to do for a trade, but for a long-term investment, I feel like there's some value here. So I feel like it's a cheap stock. Also, I added a little bit more back to my Netflix position, which obviously I'm bag holding in my wife's account. Well, she added a little bit more yesterday because I'm looking at
She
it.
did.
She added, whether she liked it or not, she added a little bit more and brought my cost basis down significantly in Netflix yesterday. Just I'm looking at the things like, I still believe in Reed Hastings. I still think people are going to be streaming. I still think they're coming up with good stuff. I don't think Netflix is a zero, and it actually makes some money. It's turned almost from this growthy nosebleed valuation stock into value, and maybe it's a value trap because maybe the earnings going to go down. Everybody's going to cancel the Netflix, and they're going to go on to other stuff. But I tell you, I like watching Netflix better than Disney Plus. I like watching Netflix better than Amazon Prime. I like Netflix, man. So I'm like, you know what? At 17 times, 18 times earnings here, it's getting cheap. So, could the earnings come down and then, obviously it doesn't look as, like it's 17 times? That could happen. But I'm taking a shot that I think, the Netflix selling is overdone. So I added to that.
Okay.
And I'm up from
I'm
all
gonna
these
nibble.
ads.
I think I'm gonna nibble. I know you already did,
Yeah.
but I'm gonna take a hard look at Amazon here. Just
Okay.
And I added that 3 days ago.
yeah,
Too
and
early.
just the fact that I was looking at it, on the charts this morning, and then CC mentioned it. Also, I was like super bullish at like 3,500. I thought I was breaking out, going to 4,000, but I decided to hold off. So I'm getting a 1,300 point discount to where I originally wanted to start building a position. Also, Triple D. I just want to talk about Disney for a second.
Sure.
We had that little discussion on it, and I mean that $100 level. You know, I mean that. I think a lot of people were waiting for that for a long time, and I don't think the institutions, maybe got all that they wanted. So now you got to figure out, where's the next area that they're gonna step up to. So I just
Well,
wanted to mention those two stocks.
I will mention for your Amazon, if you take a look at the fib retracement from the bottom there, 50% goes right to that 2000.
Oh, look
Just
at
kind
that,
of
eh?
mentioning that. So
From where? Where you
From
drawing it?
birth.
from no,
Maybe
no,
from
I
birth.
did it from 2015 here, from the trend run. And so I'm looking for sideways action when it actually starts trending on up here. And so this would, to me, would have been the trend here. This
Okay.
long trend that we just broke out from. And then now we're retracing there exactly 50% is around 2000. So
I
mean,
like
at least in
Amazon
that
2000.
I'm looking at it.
I
I've never
think I
seen
would add
Amazon
more.
trend down. So in that case, it also is interesting for me, especially long term, right? I mean,
These are long term. This is all long term talk.
yeah, long term. I'm even thinking about it too, and I'm even thinking about talking to the investment committee about DraftKings, but we'll see what happens there.
I've got
boy,
so I'm
boy.
only can talk. I'm not going to talk on the trading side of it. I have some crazy stuff. Some of these like nosebleed names. Some of these higher value on the trade side long right now.
Yeah.
But I don't want to talk about those because I want to freely. So I'm not one that's going to come on and say, "Oh, I bought this and then sell." So I'm talking about my long-term investment portfolio because I don't intend to sell these stocks. I intend to sell, potentially some of those, nosebleed, valuation stocks in the next day or two if these rallies continue. So I don't want to talk about those names, but I'm talking about the stuff that I stuck in my long-term portfolio. So I also stuck in this one. I was like, nah, you know what? It's just giving me some exposure to the theme, but I put Norwegian Cruise Lines in NCLH.
Trying to go
I'm
on
looking at
cruise.
it. I'm looking at it from this perspective. This thing is back almost, to its COVID lows.
That's
Yeah.
true.
And I'm like, are we in better shape on Norwegian Cruise Lines than we were when we were in a full-on pandemic? I think so.
I would think so too.
I think so. It was $33. It's back. I bought it yesterday right around 15, like low 15. So I'm not up much. This didn't really bounce much. It's up a little bit here this morning. But I'm just saying these things have been beat up. People were chasing the airlines and the cruise lines literally a month ago because we're all going, and now everything's been thrown out. I think these are like throw the baby out with the bathwater, because I think people are still going to do stuff. Even in recession, people want to go and still do things, though. I mean, if you go into recession, yeah, there's going to be people cancel their trips, and that's not good for an RCL or NCLH. But at the same time, there's a lot of people that haven't done anything for a long time. I would love to go on a cruise. I would love to go to Disney. I'd like to do this stuff again. And I think as we continue to get past the pandemic, this stuff still stays somewhat in favor. It's why I like Disney as well. It's why the parks are killing it. So I that's why. So I think the cruise lines, pick your poison: RCL, CCL, NCLH. Long term, I don't think these are zeros. Are they, cash flowing businesses killing it right now? No, but I think they could get back, to some of those, not maybe to the pre-pandemic levels, but we're not talking about NCLH anymore as a $60 stock.
Hey, I'm sorry to interrupt you, Dennis. It's 9 o'clock. I gotta hop off.
Go,
I got Sean Udall waiting for
Woohoo.
me to on PreMarket Prep Plus.
Hey.
I opened it up. He's gonna give us some of his picks and take a look at the market. And
Joel,
also, what?
he's a big DraftKings fan. Can you ask him for me?
Yeah, I know. I'm gonna beat him up a little bit about that. But also,
been waiting.
just a little bit more bragging. If y'all, I know you guys probably don't read newspapers, but if y'all get a chance to take a look at the Washington Post today, front and center, take a look at the picture in the article and see if you recognize the name. So, all right, I'm out of here. Triple D. I'll be catching up with you later on. Okay.
Okay, so quickly, if you want to know the other two stocks I bought, I just got to look and try and
got
remember
you, I
them because
got
I have
you.
so many things there. I rebought the Take Two that I sold. I sold the majority of my Take Two up at $165. It's back down to $100. This is
Okay.
where I originally had it before COVID started. So
Yeah.
I'm like, you know what? I'm getting it back. So I'm back in my Take Two TTW. I also like the EA earnings from the other day. I like the reaction to it. I like that I held on. I think Take Two is still best of breed. So
Yeah.
a little more expensive on a PE basis, but I like Take Two. So I added that one in the portfolio. I added Micron recently. We knew that one already. I'm just trying to look through. And what was the other one I added? Kohl's. I added Kohl's back in.
Kohl's.
Yeah, I added Kohl's back in. And simple reason, the deal's off the table apparently, but it's come all the way back down. The stock has a 4.17% dividend. It's not like in a recession, people are going to stop wearing clothes. They probably go to Kohl's more in a recession because the stuff's dirt cheap in there. So I think Kohl's actually can perform well even if we do go into a recession. And there's still that opportunity that maybe a deal comes back. Maybe somebody comes back and says, okay, yeah, maybe we will do a deal here. So, I mean, it's no deal right now. It's filled all the way back from where it was prior to the no deal. So I'm getting it back at that nice support level, 45, 46. So I put some Kohl's in there too.
Hey, at least I can see the levels that you're going off of, and that's one thing I can
You can
see.
kind of see what
charts.
you can kind of see. I had like a method behind the madness here, if you will. Maybe I'm gonna get killed. I mean, every time I've put something in the long-term portfolio in the last 6 months, it's went down. So
I mean,
so
all you
take
can
this
do
with
is
a
have a
grain of
method,
salt.
right?
I'm not on margin. I can hold on for a long time. These are not trades. Stuck these in the long-term investment portfolio. If the thesis changes, will I get out of these things? Yeah, if there's the thesis changes, but I typically hold on to this stuff for much more than a day.
Yeah, we'll see what happens, and there needs to be a method to the madness. That's what I would say. And if you're gonna go take shots, and like always, stick to some kind of method. Have some kind of thing. You saw Dennis today. He said yes, looking at the bottom, but at the same time, I know what my out is on the downside. And very, very
on the trade
important.
side of it,
Yeah, exactly.
on the trade
very,
side.
very
So
important.
all these nosebleed names that I've put on, on the trade side, if we make new lows on any of these things, I'm going to be out of those. So if I'm buying, and I don't really have a hell of a lot of swing trades, most of it's overnight stuff, But if I'm gonna look and do 50%, I'd absolutely, like on a Unity or something, I'd have to lean on the low of the move, from a trading perspective. If you're buying the pullback, and let's just say hypothetically Unity gives you a 50% retracement over the next few days, like maybe down to 33, and you take a shot, gotta stop yourself out, because when stocks are making new lows, you gotta go.
We'll see what happens there. Dennis, thank you like always for your opinion and coming on like always. I hope you have a great weekend too.
Thanks,
It's Friday the 13th.
So go Oilers, Saturday night, Game 7.
Friday the 13th.
I'm going to be happy or really upset on Monday morning.
We'll see if it's a lucky or unlucky kind of day. We'll see what happens on out there. Thank you, Dennis, like always. All right, guys, we're going to go ahead and wrap on up, get you guys over to live trading. Yes, we have a great show for you guys on live trading. We're going to go all the way until 12 Eastern time, guys. Yes, I said it. So I'm going to please need you guys to hit a like on here before we go on to live trading, because I've been working hard for my man Spencer Israel. He's in Vegas getting ready for the FinTwit conference. That's going to start at 12 p.m. Eastern today. Do not miss that, guys. If you guys want to learn a lot about trading, today is the day. Do not miss out. That's going to start at 12 p.m. Eastern. Going to go all the way, I think, until 7 p.m. all the way. So bring out the books, bring out the study material. Have the notes ready, because there's going to be a lot of lessons given today. You guys will be able to learn right here on Benzinga. Let's go ahead and just bring you guys over to live trading, and then we'll get into, I got an interview today, later today. We'll have an expert on live trading. We got a lot going on, guys. Hit the like for me, and we'll see you guys right over.